Okay bro, welcome back to the new trading recap video. So as you can see, today we had a small winning trade, more or less 15 euros altogether, okay, which is not bad but also not perfect, okay, because it could have been better. All right, so I know right now this looks a little bit complicated and everything, but don't worry because we are going to go together through it. Okay, so first what I'm gonna do, I'm gonna delete the trade, and then I want also to focus your attention on something else. Wait, let me hide that. Okay, so as you can see bro, since through day open, okay, you can see it here, we made a high and then the price just started to collapse. Okay, so my overall daily bias was actually bullish as the New York market open. Why? Because as I told you, we have been going. What have we done? Look, we went up and then we went down, and then based on OHLC theory, we should have gone up and then make a closure. Okay, so this is basically what OHLC theory is. Okay, so at some point we have to make a high, we have to make a low, and then we have to close. Okay, so because of that, my idea was that we would go higher. Okay, and then what actually happened is exactly that for a little period of time. Okay, look, market opened at 9:30 New York time, okay, and then the price swept both pre-market low and London session low, and then it absolutely exploded upwards. Okay, so when we swept both previous market low and London session low, what have I been monitoring? I put here a little blue line on top of this swing high. Okay, why? Because should we close above the swing high, that after sweeping the liquidity to the downside, okay, that should tell us that we have indeed swept liquidity and we are now slowly getting ready to go upwards. Okay, so yeah, when we swept liquidity and we also broke structure by closing, body closing above the swing high, I started to draw equilibrium. Okay, and what did I do? I draw the equilibrium from the most recent low that happened to the most recent high, which was more or less like here. And additionally, what have I done is I draw an order block, which is actually represented by the last move to the downside when we sweep liquidity. Okay, so where have we swept liquidity? With this candle at the open. Okay, so what was the last move down? Those four black candles. Okay, so that was an order block, and now I was paying attention because what was happening, the following thing was happening. So we went down, we swept liquidity, we went up, we broke structure, and then should we continue higher, we should have touched either equilibrium or order block, or preferably both of them, and then bounce and go up and up and up and higher and higher and higher. This is what I was anticipating. But of course, the reality showed different, okay? Because as soon as as soon as we touched the zero point 0.5 on equilibrium, and as soon as we touched the order block, I went to 1 minute chart and I started to pay attention for the reversal. But then I noticed the following thing. I noticed that with this huge movement to the downside, we actually closed, you see with this candle, we closed below equilibrium and below order block. So what did that tell me? That told me that we disrespected equilibrium and we disrespected the order block. So there is a chance that we will not go higher but lower instead. So when that happened, I pressed short and I've put my stop loss above the equilibrium. Okay, and I was targeting more or less 1-to-1 risk reward ratio, which was somewhere here. And then I let the price run. And what happened afterwards? Okay, once I hit 0.5 on the trade, I took half of the position off and I moved my stop loss to break even. Let me add that. So here we have stop loss. Once we did that, I moved my stop loss from like loss, okay, I moved it to break even, and then I was waiting that we hit 1-to-1, and then once we would hit 1-to-1, I would slowly move my stop loss lower and lower and lower into the profit. But once we made this huge movement up, I saw that we were slowly going lower and lower. So once that happened, I moved my stop loss above this high. Why? Because usually, how is the price? For example, when the price is collapsing like this, the price will usually go up, up, up to retest the trade and then continue lower. Okay, so I wanted to avoid that I get stopped out with this move to the upside. So that's why I kept my stop loss in the break even, and then once we had this move down, I started to put my stop loss slowly into the profit. But then eventually the price started to reverse and I got stopped out for I think here I made additional 1.5 euros, whatever. Like altogether, this was around 14 euros 71 cents, I reckon, and more or less. And yeah, that was about it. Okay, so this was the trade. So let me explain you again what actually happened. We swapped liquidity to the downside. Wait, let me delete this. We swapped liquidity to the downside. Here you see with those opening candles, and then we exploded with the price. Okay, the price moved suddenly up, and then the price started to retrace. But instead of retracing, what we saw was complete disrespect of both equilibrium and order block. So that gave me a higher chance that we will go lower. So I pressed short, and we indeed went lower for a little bit, but then the price obviously returned and went upside. Okay, why? Because as I told you, based on OHLC theory, we made a high, we made a low, so we have to close again. So this was the closing actually. So yeah, it's logical that the price went upwards. So now when I told you what could have we done better is the following thing. We could go to 5-minute chart. Why? Because over there we had in here we had a bullish fair value gap like this, and additionally we had a bearish fair value gap like this that completely inversed the bullish fair value gap. Okay, so instead of that, this is a huge potential that we will go lower. Okay, so instead of putting my stop loss all the way here above those swing highs, I could put my stop loss, for example, above this candle that produced bearish fair value gap, and then I would have at least 1-to-1 risk reward ratio. Okay, yeah, you can see that the price completely collapsed until 1.07. So instead of making 10 euros more or less, I could either full TP here or at least sell half of the position. So I would have, instead of 14 euros profit, I would have more or less maybe 25, or yeah, 25 realistically. Okay, so 10 euros more. So this is what we have to pay attention for tomorrow, to also not to indeed enter the trade on the 1-minute chart, but take a look at the confirmations and confluences that happen on the 5-minute chart as well. And this would then greatly increase the trading. Okay, I mean the risk reward ratio. All right. So yeah, that's about it, bro. I'm gonna now enter this trade into my Discord server. Feel free to join, it's for free. I'm not selling anything. I also have an Instagram account that you can see here on the official links right now. And also feel free to subscribe on my trading YouTube channel, where yeah, you can see it's just trading content. Okay, so you are more than welcome. As I said, I'm not selling anything. Do the hard work, bro, and see you on top of the world.